Mil gracias, Pame. Nada, para mí es muy fácil y me da muchísimo gusto presentar a Fernando, quien va a estar moderando el panel. Fernando es un emprendedor que ahora se ha convertido en inversionista y está liderando el tema de Buen Trip Ventures. Le encanta apoyar a emprendedores, dar primero, ver cómo evoluciona el ecosistema, apoyarlos con su tiempo, con su conocimiento y finalmente con inversión.
Of launching a venture capital firm, so we created Matter Scale Venture, which, as it says, it basically focuses on industries that matter and companies that scale. It's a global fund that basically we invest in entrepreneurs fighting inequality that are located in or unserved regions in the Americas. So this includes US also, but probably more on the West, some areas on the US that doesn't have the ventures that you see in Silicon Valley, for example, or New York. And these companies were investing in companies that apply technology and data analytics to offer high quality services for the majority of the population. We want to help all these regions to increase the capacity of have better quality of services, meaning education, healthcare, workplaces, financial services. So we did a first closure already, and we have invested in a couple of companies, and we're very excited to be a player in the region to complement what's happening in the venture side here in Latin America.
Great, excellent, thank you. Adrián.
Hola a todos, buenas tardes. Hi everyone, my name is Adrián García. I'm sitting in San Jose, Costa Rica. This is not my real office, but it was a real nice background. But our office is actually quite as nice as the picture. We are an early stage venture firm based in Costa Rica that covers Central America, so Guatemala all the way down to Panama and the north part of the Andean region, Colombia, Ecuador, and Peru. And as the companies grow and find new customers, new markets, some of our portfolio companies have grown north and south, so Mexico, US, and then down to Chile, Argentina, and beyond, if they aren't going global from the get-go. We are focused in these small and medium markets of Latin America for doing all the work, support, and financing we can do for the most talented, promising entrepreneurs from this region that are looking to build at least regional businesses, if not global. The definition of operating in small and medium-sized markets is that the markets are not enough for a continued path of growth, so they have to look ideally for the world, if not for the region where they are. Yeah, we have invested a little bit upwards of $10 million in a dozen companies with one successful exit in fields like B2B software, B2C software, biotechnology, and also traditional sectors such as construction and education, where there is, we believe, in a lot of opportunity for Latin America in this intersection of technology and traditional fields. So agriculture, education, health, energy, government, or the efficiency of the government, and so on. So glad to be here. I was promised an Ecuadorian ceviche, so I hope that is distributed at the end or at some point of the panel, and I leave you with that.
It'll have to be virtual. Hi, Jodi, go ahead and introduce yourself.
I'm going to second that. Hello, everyone. Hello, Opportunity Summit. You've made it to the last panel, so congratulations. I'm coming to you from California. I'm also looking for some ceviche, Fernando. So I run a firm called Align Partners. I'm the co-founder of that firm. I've been a venture capitalist for over 20 years, but really I'm a recovering founder. I come from a family of entrepreneurs, and I was part of several startups as well before going to the dark side. About 10 years ago, I formed a firm to focus on enterprise software, but primarily to focus on alignment, which is something we can dive into. The idea that there are better ways to align the interests of investors and founders. And when we do that, we can create better resilience across different types of economic situations. So my thesis is certainly getting tested in this COVID year. Our firm has raised 3 funds to date. So we have about $125 million under management. And I'm excited to talk with y'all about how to navigate this crazy venture world.
Great, thank you. Well, COVID is certainly testing all of our resilience. And we heard earlier this morning from Ivan Lopez at Techstars, you know, we know the major sectors of the economy and startups that are being hit, like travel, fashion, automotive, and prop tech. But others have also seen a positive impact. In particular, the thesis of digital transformation and digitizing sections of the economy. You know, you're saying Latin America, maybe digital transformation has been accelerated by 10 years. So some of those are obvious: health, education, logistics, and e-commerce, as well as the future of work and remote work are all seeing this positive COVID impact. Let me start out by asking you a little bit about your own portfolios and your own experience, and this is aimed at all of you. Jodi, you can go ahead and get started. Looking at your own portfolios, can you tell you sort of what types of businesses have been positively impacted by COVID and why you think so?
Sure. You know, it's been an interesting variety of impacts from COVID, not all of which were ones that I expected. I mean, I have one company that's in the healthcare space that just got slammed because the provider market that they serve just can't do anything right now but serve, you know, but shut down things that are not COVID related and enhance things that are COVID related. But you know, it's interesting, the impacts for the companies that have been positively impacted, I think can be segmented into immediate impact and enduring impact. You know, there's some companies like, I'm on the board of a company in the legal software space that is probably the leading provider of cloud-based practice management software for their particular segment of law. And gosh, I mean, they are so far ahead of plan that we're actually going to have to throw more money in just to help them hire more salespeople. And in their case, that's both an immediate and an enduring impact. I am seeing a bunch of companies where we have positive impact because of the need to take human beings out of processes. For example, I have an IoT company, Internet of Things, that serves critical infrastructure, and it's now even more obvious that we need to replace humans with sensors for many of these things. And yet, while they're winning every RFP that comes their way, the decision processes are taking longer because of COVID. The implementation processes are taking longer because of COVID. So I think as you look at your own company, as we look at our portfolios to see how COVID will impact, it's important to understand what is shifting now and what is shifting in a more enduring way. The decision processes are slower now, but we have to prepare those companies for the more enduring changes. And that's what we're spending time doing now, is helping the companies prepare for the enduring changes, like, you know, more work from home, more broadband access, more need to take humans out of processes than we have before.
Great, thank you. Adrián, what are you seeing in your portfolio or the companies in your purview?
Yes, agreeing with Jodi's messages of various aspects and effects that we're seeing in the portfolio. I think our balance is positive. And let me give you 3 examples. One, we have a company called Juli, H-U-L-I, that is in the field of health tech. They provide software for the management of the practice of doctors and small clinics and hospitals. And they, for obvious reasons, accelerated in their product roadmap the telemedicine, so the remote medicine part of their product that they had in the making, and now a year ago, even the top doctors would have not considered telemedicine an option, and now there's increased demand, a lot of demand for telemedicine solutions in the countries we work with this company, Juli. So the pandemic was actually an opportunity to add extra gasoline and add extra effort and resources to the development of this product, additional product, or part of their main product that they were thinking about. So the intersection of health and technology is very important, and there's a lot of other opportunities in diagnosis and other areas. Number one. Number two, we have an investment in a biotechnology company called Speratum. These guys have a couple of patents, and they are developing a potential cure for pancreatic cancer. Pancreatic cancer is not a local problem, it's a very global problem. Out of Costa Rica, with most of the team being from here and the science being developed out of here. A part of their technology was apt and available to be utilized in a potential COVID-19 cure as well. So there's hundreds of, this is a race of major pharma companies and startups and other organizations trying to find a cure for COVID-19, and this company is there, and it would, I mean, finding a cure for the pandemic is probably the most direct effect that you can see in a startup, right? It goes directly into the heart of the problem. And number three, we have a company called Slide Bean. They do presentation software, mostly for US-based small businesses and startups that are trying to create their nice pitch decks and materials for investors. And we see a lot of activity, increased activity in the US and beyond, of people trying to reinvent their lives, start new companies or raise more money because they're running out of money or they need more money. And this company is 100% software that you can utilize. And so we saw an uptick in their sales because of the pandemic. So those are three examples of very positive effects of the pandemic, which is, of course, is not nice for anyone in the general context, but for these three, it was actually very good.
Thank you. Adriana, what kind of opportunities are you seeing?
Yes, well, in our case, actually, the advantage of being a new fund is that we didn't have portfolio before COVID. We built our portfolio with COVID. But what I would say is, and actually, COVID kind of reiterates or re-emphasize our thesis, which was exactly investing in these sectors that we saw that were very regulated with a lot of incumbents, but that with technology it could bring access and quality of services to the majority of the population. So in a way, we were kind of on the side of positive side of what we can see of this pandemic. In that, we have invested in a company, and probably a couple of aspects that I will highlight is the deregulation, and going to what Adrián just was saying, health tech is something that has been very positive, not only because people cannot go outside to have and they don't want to go outside to have an appointment with a doctor that you can have by chat or by video, but also the deregulation of the sector has become something super positive that probably it will took us for many more years if this pandemic didn't exist. So I think that is something positive, and probably education will be another benefit in that deregulation. We have seen, at least in Latin America, a lot of barriers for universities and all the public regulation that is very, very slow. And we are seeing now a lot of opportunities for edtech, where you can study quality studies without necessarily going to all these formal education, let's say, which at the end will become a challenge for the formal education, for the universities, will become a huge challenge, and they probably have to speed their digital transformation, but it opens an opportunity for a majority of the population that they don't necessarily have access to these type of services. So we're seeing that in education, the deregulation also. And the other positive aspect that I highlight is the adoption, the tech adoption really speeds. And when you talk to entrepreneurs, they said in these sectors is what I thought it was going to happen in 10 years, it happened in 5 months. So remote work, for example, and flexible jobs, that was something that we thought it was going to happen in 5-10 years, but today it's a reality for almost every sector. So in future of jobs, we're seeing a lot of opportunity, and that is positive because not only the opportunity to develop some solutions there, but also for more traditional companies that refused in a way to move into the remote world. They have to, and they're probably seeing other challenges, but I see, and derived to that, we're seeing opportunities, for example, in cybersecurity, because, well, we were talking earlier about Zoom and all these things that happen because of security issues. So definitely cybersecurity is one of these sectors that we also see that has a huge potential, and that won't last with the pandemic. It definitely will continue to grow.
That's a very interesting point, because when you think of the history of capitalism, you usually think of these cycles of boom and bust, where the cycles of boom are probably driven by this exuberance and overinvestment, and like we saw at the end of the 90s, a huge investment in internet, which then a lot of companies that were participating in that failed. But as a consequence, we now have the infrastructure that we needed for the new wave of companies to come out and find their business models. In this case, I think companies are being forced to invest, and individuals as well, invest into digitization and new infrastructure, better bandwidth, out of necessity, even though economically probably it's not a time of irrational exuberance by any means. But Jodi, we had talked about how you're seeing that in traditional retailers, and because e-commerce is one of the things that we're seeing in Ecuador booming, but many times it's just e-commerce as yet another e-commerce website, like what we used to call a .com back in the 90s. But how are you seeing the impact of COVID in traditional companies, and where can entrepreneurs find opportunities in serving those companies that need to transition?
So the the environment has changed so much in so many ways. One thing I would caution you started to mention about the overall environment and irrational exuberance, and in particular the .com boom and bust. So I think that's an interesting set of experiences from which to evaluate where we are today. I know I have a lot of scar tissue from having invested through that through that time, but right now we're seeing some very weird inconsistencies and kind of decouplings within the market. And I think entrepreneurs need to be aware of these, because they're going to continue to impact us as we think through our business plans going forward. In particular, while the US stock market continues to just go up and up and up for a variety of reasons that we can discuss, some of which are rational and many of which are not. One thing that isn't as obvious is that the private markets are not funding the same types of venture funds right now as they were a year ago. What does that mean? Right when COVID started, all fundraising stopped for a few months. It was assumed that LPs, the limited partners that put money into the venture funds that then becomes investment into entrepreneurs, that the LPs would just not want to invest in funds where they couldn't meet with the partners. Everybody's kind of gotten over that now. There's no way around it. If you want to be in the business of investing in funds, you've got to invest in people who you're not meeting in person right now. But the effect of that on the market has been that large funds with very established track records are closing new funds now. Small funds, like the ones that the three of us operate, are not closing new funds at the same rate as they were a year ago. That may not impact investment this year, but it will a year or a year and a half from now. So it's really important to understand those trends as you think through your capital consumption. Now, you asked more specifically about opportunities in retail and so on. There are some changes that are going to be permanent to how we consume. So for example, I'm on the board of a company that does omni-channel distribution solutions. So they create great fulfillment experiences for users of specialty brands. We thought at the beginning of COVID that this company was going to be in serious trouble. I mean, there's no retail going on. If you're talking about ski equipment or specialty stuff like music, where you need somebody to help you string the instrument or set up your ski bindings, what are you going to do without the retailers? But it turns out that COVID made this company even more resilient, have even more demand, because there needs to be more ways to create fulfillment opportunities for those entrepreneurs. So what are the things that you're doing now that are different than what you were doing before and that will endure? I mean, that's where the opportunities are. Some are very obvious. I mean, Zoom, for better or for worse, is very obvious. But it's the non-obvious ones, the back-end solution to fulfilling buy online, pick up in store, the back-end solution to enabling scheduling solutions for grocery store workers that now need to have new things accounted for. Those types of things are, I think, where there's some really interesting opportunities right now. We're seeing a lot of that right now, an enormous amount of new deal flow in those regions.
I'd like to maybe shift a little bit and ask you, and anybody feel free to pick up, but are you seeing any companies that are struggling even though they should not be struggling, and any surprises? I don't know who wants to take this, Adriana or Adriana. Adriana unmuted
well,
first.
Yeah, well, definitely there are companies and sectors. Well, the tourism, all the companies that are in tourism are in travel. Well, that's something that it will take a little bit of time to pick up. Probably the prop tech, in the prop tech sector, I think it's probably during a period of time because people are in homes, they are not spending, they're not buying, but that this is a period where probably we will see a much more digitalization in that sector. So I see there is an opportunity there. Food, but again, I take Jodi's point in you have to, I think entrepreneurs needs to be fast in pivoting and in identifying the niche of what is the differentiation. In food, for example, I'm going to put an example interesting that there is a company here in Colombia called Muy, which is a food tech. It was a restaurant that for corporates, let's say, very cheap, very low, for low prices. They had 40 places in place, raised $15 million and around in January to expand very quickly. I think Adrián remembers correctly that company. And well, it came COVID and nothing. All their places are near offices, so there was no clients at all. But they pivot. The entrepreneurs are so smart that they were able to pivot to become, and it's the first completely digitalized restaurant. But they create a brand that is called Robin Food, and they started to do other brands. They have around 10 new brands with dark kitchens, which actually the dark kitchens are the muy restaurants, and they're growing. I talked this morning with them, and they're growing exponentially. So it is incredible how fast they were able to pivot in so short period of time in a sector that is it's difficult to think where you have the opportunity. So definitely I think looking at the same cases, logistics, for example. Now what we're seeing, many logistic companies, but a lot of them in Latin America doing the same thing in last mile, not a lot of innovation. And I think in logistics, where there is a huge opportunity in Latin America, there is a need to go further in being more creative and going to what is the differentiation, probably cross-docking, neighborhoods, the value proposition of delivering 30 minutes, but how can you do that really and respond to that needs, etc. So I think pivoting is super important, and being able to, and there is where having a great team that can execute fast is important, but also identifying specific areas of a niche where there are opportunities.
Adrián?
Yes, there are companies with problems. What I would like to mention there is that Latin America, similar to other emerging regions of the world, has a huge deficit in VC financing, or let's say early stage company financing in all its forms: angel investments, early funds, growth funds, and others. So there's still a huge gap, although I'm glad to see new funds like Adriana's and others entering the field. We need a lot more funds, many more LPs from family offices, corporations, individuals, successful entrepreneurs that are making this snowball a lot larger. So yes, there are companies that suffer a generic lack of investment, so they have to work even harder in this pandemic, because some individual investors can use the excuse, and in most of the cases it's real, that, hey man, we're in COVID, middle of this pandemic, so I can't really offer you more money. The point I'd like to make is that this is the best opportunity in our lifetime to reinvent a majority of the things that we say, do, or experience in our daily lives. So the way we do transactions with the governments, the way we do banking transactions, insurance, the way we get health, education, everything can be reinvented. So why not now? There is immense opportunity to recreate, like Muy is a great example, Adriana. Muy recreated the way people would consume food, and now that model is being sort of shared with others in a really innovative way. So listen, I don't want to go to the bank anymore. I hate going to the bank and having people and signing a piece of paper, and they have to come a motorcycle so that I can, o sea, eso ya basta, o sea, suficiente del pasado. Sorry for the Spanish, but everything or almost everything can be reinvented. And even in the sake of health and security of the individuals, you know, like it's really, I was really sad to see the other day and you can see it in almost any of your cities in Ecuador, certainly, a line of folks waiting for a government office to do whatever thing they needed to do, a stamp or a piece of paper. Like, none of that should be happening because of efficiency, but also because we need to take care of our people so that they don't get infected by this COVID-19. So Yes, venture capital in Latin America, we hope is going to continue to grow a lot, attract more foreign direct investments or foreign investors that see this emerging region of the world as a great market to start things or to grow things. But I hope that some of the ideas and ways our life is being reinvented come out of Ecuador, in Cuenca, in Quito, in todas las ciudades and in all of our countries, because our Latin Americans are immensely creative, innovative. They just need help, support, financing, and a bunch of other things. So I really hope this is a great chance for a lot of us in the venture field to find these new entrepreneurs and new companies, but for the general population to see a life that is better, like not going to the bank.
Gosh, a thousand times what Adrián just said about this is the moment, Adrián, for bold visions of what the future should be to get implemented and tested now. We will never have a more malleable metal to work with than society changing right now. I totally agree with you. Fernando, when you ask about companies doing worse than they should in this environment, I will tell you, I've got companies that aren't meeting their actually increased potential in COVID. And I've also got companies that should have been just squashed and didn't get squashed and are performing better than they should. And in both extremes, there's the same reason. It's not financing, it's not pivoting, it's leadership. In every case, it's leadership. And this is not culturally unique, this is not geographically unique. Companies under pressure, and in each case, needing to accelerate because of opportunity or needing to rethink because of a setback, that's pressure in either case. The companies that are doing well are ones where the leaders were very clear to first the employees and then next to the other stakeholders, whether that's shareholders or customers or both. These are the things that we care about right now. Here are our values, and here's how we're going to use those values to make decisions. Especially at this moment when you have remote employees and everybody can't sit together, the clearer you can be about how decisions are made and why, the more unified your team will be and the more productive you'll be. And this may sound like a soft skill. This may sound like something that has nothing to do with the capital markets for COVID and for startups, but it is everything. It comes out in the capital, comes out in the productivity.
Yeah, absolutely. I wanted to shift a little bit our focus, but this last part is so interesting. I think some of the things that we see at Trip, people coming up, and I don't know, Jodi, if you see this in the States as well, but like in Latin America, in countries where, in particular, emerging markets, where the legal systems are probably not as strong, the creating strong founding teams becomes very difficult because there's a general difficulty in building trust between people, and many times founders with good ideas are unable to find good tech partners and vice versa. So Jodi, I don't know if you see this in the States. It seems like it's easier to work in the States with people that you've known for very little time, but I don't want to ramble here, but a lot of people, when they look at venture capitalists, they see it, as a wallet or maybe as a source of contacts and know-how, and they work on their pitches and the market size and all this, but at the end it comes down to leadership and it comes down to people. Basically, it's a soft skill, basically. So I don't know if you want to expound a little bit more on that point, what you're seeing in the States, and then I'll definitely want to hear what Adriana and Adrián have to say.
Well, gosh, you mentioned something so interesting and so vital that gets overlooked. Even though you just asked about people, and I'm about to go into a deeper part of where you came from, and that had to do with capital formation. And just like that leadership piece may not be the most visible aspect of success, it makes the success. The capital formation side, let me back up a second. I have an almost religious belief that entrepreneurship is a cross-cultural force for change and for building economic security in a country. And it's something that is qualitatively different in the United States than any other country in the world, but other countries are learning. It used to be that in Europe, for example, it was very, very hard to start companies, partly because you couldn't invest in preferred shares. You could only invest in common shares. And it created tax problems for founders. In the spirit of Adrián's call to action that this is the moment to make change, in countries where you don't have capital formation structures that enable preferred share investments, that enable founders to raise money without causing a tax bill, and most countries have this problem, that if you raise money at a higher price, the founders now have to pay taxes. Countries that haven't solved this problem are going to be hamstrung in creating trusted bonds between investors and entrepreneurs, and trusted bonds between founders. Somebody among the hundreds of people who are sitting here right now must have access to the right legal structures and the right government people to be talking about this. But this is the moment to be doing it, because people are willing to experiment with new structures right now. So it's the openness of those capital structures, I think, that enable the US to have an entrepreneurial environment that encourages risky ventures, both risky joint ventures between two founders and risky investments between an investor like me and a founder who I've not met before. In the absence of that, it's all about personal relationships, and it will never propagate broadly. What are you, Adriana and Adriana, seeing in your respective countries on this front?
Yes, well, I totally agree. I think in adding to what you said, from the government perspective, I agree there is the moment to change and improve a lot of legislation. But I also think that in the mind, and Adrián mentioned it a little bit, in the mindset of investors in Latin America, we need people to get a better understanding of this asset class, of what means investing in venture, and learn fast, because I do think that there is a huge opportunity in Latin America of having, and we're seeing it. We're seeing right now more and more unicorns. Last week, Kavak, and then we have the Rapis, and then we have the, so we're seeing more and more of these companies, but the majority of the funding comes from the US. So the returns goes to the US, and the money does not recycle here in the region. And that's why we need more local investors, more family offices, more entrepreneurs that are successful to engage and invest, and that's the only way that the ecosystem will develop. Here we're seeing it very clear in Colombia with, we call it the Rappi gang. They have been very active investing in other entrepreneurs, and having successful cases is super important to recycle that. But definitely working on the government, but also we have to work in that. Now that I'm in fundraising, I promise that this is part of, half of my time is capacity building on what this asset class means, why it's important to engage in that. But the last thing is that in early stage, you invest in people. At the end of the day, the product probably is halfway. So when you invest, and as venture capital, and as an investor, you're investing in the entrepreneur. So there is where trust and entrepreneurs that can be more like with bigger mindsets, leadership, capacity to execute is very important, because at the end of the day, that's half of what we look at when we invest in early stage.
Thank you. Adrián, specific question to you. When we were preparing for this panel, we had an interesting conversation about what you're seeing, you're also a professor at INCAE, one of the most prestigious business schools in the region. But you still, and you know, I'm asking this because I see a few questions from the audience that have to do about approaching venture capitalists. So do you see any gaps between, you know, the venture capitalists and entrepreneurs, and what should entrepreneurs do to close that gap and be successful at raising funds?
Yes, certainly. So, and going back to the founder sort of connections and diversity that Jodi mentioned, yes, diversity is not just a nice word, it's something that really creates value within organizations, not only startups. So that is very important. And the fund managers have to make sure in the way that they can that the founder bond is strong, is productive, and any problems that can arise if it's needed, the fund managers can come in and mediate some of those problems to keep the company in positive growth trajectory. To your specific question, yes, investments and or investors, VCs and angels in Latin America, maybe Jodi will laugh at this, but so in San Francisco, when you are out in a bar and you are meeting folks and you say, oh, I'm a VC, and then probably the looks you get, Jodi, are probably, oh, wow, great. So you must be super successful, incredibly rich. They imagine you have 4 cars and mansion in with the view of the bay. That might be true.
I hope that's not that big, Adrian.
I'm joking, but in Latin America, when you say, okay, I'm a VC, they're like, what? Un BC, like a B grande, B pequeña, que es un B? O sea, it really doesn't get you anywhere. Number one. So there is, as an example, that joke of, there is a lot more information that entrepreneurs have to get in order to understand this asset class or the broader asset class. You know, how do I approach angels or VCs? Like I would start with Google. Okay, how does a venture capital firm work? What are the venture capital firms in my country or neighboring countries? Who works there? What are their profiles? Where do they go to school? What are their interests? How do I approach, in general, a potential investor? I say this in class sometimes that it resembles a little bit when we were young or not so young, or whatever age you are, like dating. You know, you just don't approach a person saying, hey, you want to go back to my house? You just don't do that. It's a process. You know, some people may get lucky that way, but investors and entrepreneurs both have to find a way to interact and communicate with each other in a better way. Investors are also not the ones con el sartén en la manga. There is no balance of power tilted towards investors just because they have the money. If you're a really good entrepreneur, you are probably the interesting asset that everyone's pursuing, right? So point is, to your question, Fernando, if you're a young entrepreneur, try to understand how these firms work. What are their interests? What have they invested in the past? Where do these people go? Where can they meet? Where can I meet them? There's a lot of blogs about it in order to be successful at building a relationship. The goal of an entrepreneur is not raising money. That's part of the journey. But the goal of an entrepreneur is to start and ideally grow a successful, profitable organization. The funding is part of it, right? And some of us participate in that journey. But in order to do that, you have to build ideally long-term relationships with funds or investors that you need money and advice and contacts from. It's not a transactional thing. You give me money and I'll give you this or stocks or whatever. It's building relationships. Last point, Fernando, I think Latin Americans are, I hope you're not recording this, maybe you do, pero somos un poco come mierdas a veces. O sea, in the sense that, to Jodi, to explain this, so some people in Latin America have traveled more times to your city, to San Francisco or to New York, than they have traveled to the country next door. So it doesn't make any sense. People are more proud of their soccer team going well in the World Cup rather than the entire Latin American group of teams doing well as a whole. So you see this in the Bay Area, Jodi, where you have the Indians getting together, the European Americans, the Turkish, but Latin Americans, you have the little group of the Argentinians, the Brazilians, so we should work more together, I think, as a subcontinent, America being the whole one, to be able to fill these gaps in the capital formation that you were referring to, Jodi, because everyone's sort of doing it on their own, trying to win the World Cup, you know, and doesn't really make any sense. Sorry, these are personal views, but...
My team is Croatia, so...
Croatia is a great team, by the way. So for entrepreneurs, ya to the point, o sea, entiendan que estas personas, cómo funcionan, qué hablan, dónde están, qué les gusta, cómo interactuar con ellos. No todos son iguales, todos son de hecho muy diferentes y así logran establecer conversaciones que eventualmente lideran a, en algunos casos, una inversión. Sorry for the Spanish, just because of the audience.
Okay. Yeah, the problem with that is that if people are in the Spanish channel, they might not actually be hearing you unless the interpreter also repeated what you said. Adriana, we had discussed, you know, many people are able to attract the interest of VCs in Latin America. They seem to have a strong product, a strong, you know, traction, and then they reach you. And what are you seeing? Going back to capital formation, capital structures.
Yeah, here and here what I would say that we see a lot in the region is dirty and terrible cap tables, and I think that's a message that I want to send because I understand when I always says when don't raise money when you need money, raise money when you don't need money, because when you need money you will take whatever for any price. So that is challenging. You still see at this time a lot of delusion in founders, entrepreneurs that are doing their seed round and they have 10% of equity in the company. So that is complicated because for an angel investor, probably having the power or the majority of the equity is okay, but then both are going to lose. The entrepreneur, because they're not going to raise more money. There is no way that a fund will enter into a company where you're so much diluted. You are the one that understands the market, the product, the team. So I don't want you out of the company so soon. And the investor will never get out of the investment. So I think this is something that today there is a lot of literature there, but talk to other entrepreneurs, talk to funds. We actually advise many times I'm approached by people saying, hey, can you help us doing this? We kind of guide entrepreneurs in more in a mentoring way, but really before doing if you're not sure if you're doing the correct thing, talk to other VCs, other investors, lawyers, etc. Because then reorganizing the cap table takes a while. You can do it, it's not impossible, but it takes time. So that's a message that I would like to leave to the audience.
Thanks, Adriana. It seems like, we can talk to entrepreneurs about the importance of a clean cap table, but we also need to talk to angel investors and wealthy investors in Latin America that they feel like if they don't have majority, then it's not worth their time to invest. We need to be wrapping this up. So Jodi, I'd like to go back to one of the words that you mentioned earlier when we first started the panel, and that's the idea of resiliency. Obviously, we all need to be very resilient in these trying times as individuals, but I think you have a broader perspective of what resiliency means in the perspective of a startup and a company.
Sure. And given our limited time, I'll be very brief. But one thing to keep in mind is a lot of new entrepreneurs, a lot of new founders mistakenly believe that more money is more resilience. They look at companies that have raised lots and lots of money, and they say, well, of course they're going to survive. Look at that. Having more money creates a whole, in some cases it can be an accelerant, in some cases it can be an anchor. Your scrappiness, your ability to be capital efficient is your superpower in lean times. And here's why. What matters isn't the amount of money in your bank account. What matters is your runway. How much time do you have until you run out of money? There are two ways to do that, right? You can have more money or you can spend less. The best form of financing is revenue. The best form of financing is always going to be revenue, no matter what anybody like me or any other investor tells you. The more you keep for yourself, the more you can self-fund. In many ways, the better you will be. There's a lot to unpack in there, and I know we don't have time, so I do want to leave you with just a follow-on to something that both Adriana and Adrián referenced, and that's, in approaching investors and trying to understand how to best present to them. Your superpower as an entrepreneur is curiosity, and it always will be. Be curious about why those investors do what they do. Be curious about how their businesses work. The same way you would be curious about your customers and how their businesses work, because you can't serve the customers unless you're curious about how they work. The more you approach the process with a sense of wanting to understand what's in it for that other person, there's no naivete in doing that. It's actually very refreshing and very honest and a really useful way to go about it. So I hope you'll find fundraising to be a process of discovery and not just of pain. And I hope all of you see lots of success in this very challenging world that we're in right now.
Perfect, thank you. So that'll do it. I think in closing, we've touched upon some very interesting topics. First of all, I think like any other crisis, COVID is also an opportunity. We're seeing that especially in the area of technology, where even in robust and mature markets like the US, there's still been a push for transformation and digitization. However, when you think about your own businesses and business ideas and entrepreneurial journey, you need to decide between what you think is going to be a short-term, short-lived impact of COVID and what's going to be a more long-term trend that you can build a company around. I think we've talked about the importance of leadership and teams and communication, because things change and change rapidly, and some things shouldn't change, like your values and your overall mission, but then you should be flexible otherwise. We talked about capital structures and capital markets. For those that feel that Ecuador probably doesn't provide the best incentives for capital formation, the companies that we are investing in that are usually companies that want to be regional and grow really fast, grow regionally really fast, tend to constitute their holding company outside, usually in the US, which, where everything is, you don't have to reinvent the wheel. Things are pretty well proven there. And yeah, don't be afraid to approach venture capitalists, but before you do so, do your homework. Learn what our interests are and see if those interests can be aligned. I saw earlier in the chat people complaining about the inexistence of a venture capital industry in Ecuador and Latin America. inexistence of angels, and that's just not true. I mean, there's very few, and we don't go to bars and become famous by saying VC, but we're out here. So just do your homework, and obviously, if you're going to be a successful entrepreneur, you have to be proactive. So that's on you. And I think that's it. I want to again thank everyone. Thank you for participating in this panel and participating in the first day of the Opportunity Summit.